Prices fell sharply in 2022 and 2023, then started recovering again in 2024. And by the end of 2025, we are seeing something that looks like a cautious comeback, but definitely not another boom. So the real question isn't just should I rent or buy? It's what makes the most sense for your wallet, your stress levels, and your long-term plans in this market. All of this is going to be discussed in today's video. By the way, if you're new here, I'm Essen, I'm a researcher, and on this channel, I share how to build wealth in Germany. So why does this question matter right now? Buying versus renting in Germany. Let me tell you a quick story. A friend of mine, David, tried to buy an apartment in Stuttgart in early 2022. Back then, prices were still rising, mortgage rates were low, and everyone thought real estate only went up. David was outbid 3 times in a row, and then interest rates skyrocketed. Suddenly, demand froze. Prices dropped by 3.94% in 2022, and then another 7.11% in 2023. Something Germany hadn't seen in years. It wasn't just a correction, it was a reality check. People who had stretched their budgets were now feeling the pain. Fast forward to 2024 and 2025, the story shifts again. Prices begin stabilizing. In fact, by Q2 2025, the housing price index is showing a 3.1% increase year on year, with real inflation adjusted growth of 1.09%. Experts call it a cautious recovery, not a boom, but definitely movement. So if you've been feeling confused about the housing market, trust me, the market itself is confused too. So why comparing rent versus mortgage is dangerous? I once asked a friend why she was thinking of buying a place in Hamburg. She said, my rent is 1150 euros and a mortgage calculator said I could buy a home for 1180 euros per month. So why not? This right here is the biggest trap people fall into. A rent number is simple, while a mortgage number is an iceberg. Under that 1180 euros payment, you've got fluctuating interest rates, rising maintenance costs, property taxes, unexpected repairs, house guilt, and the fact that Germany's construction activity has dropped by 14.4% in 2024. And on the renting side, demand is rising because fewer people are buying. Rents rose 5% in 2023 and 3.7% in 2024. And big cities saw 4.9% growth just in the first half of 2025. So the point is, you're not comparing two prices. You're comparing two lifestyles and two entirely different financial journeys. This is where the rent to price ratio can be very helpful. Let's compare two situations again. Two couples are looking at the same building in Munich. Couple A wants to buy a 70 square meter apartment priced at 600,000 euros. Couple B decides to rent a similar apartment for 1650 euros cold rent per month. Couple A thinks buying is smart because the mortgage payment looks similar to rent. But here's where the rent to purchase ratio makes things quite easy. Take the purchase price of 600,000 euros divided by the annual cold rent of 19,800 euros, and that gives you a ratio of 30. So a ratio above 25 usually means the market favors renters. And in Munich, with existing homes averaging 8,580 euros per square meter, the ratio tends to be quite high. Meanwhile, in Dortmund or Leipzig, where apartments average around 2,500 to 3,000 euros per square meter, the same calculation might give you a ratio of between 15 to 18%, suggesting buying could genuinely be more affordable. This tiny formula changes the whole conversation. It takes the emotion out of it. And trust me, there's a lot of emotion in choosing where you live and replacing it with clarity. Because most people don't know the whole numbers and the upfront reality. If you've ever sat across from a German bank advisor, you know the look, that calm, serious face when they say, we will need a 20% down payment and then the additional costs. For a 360,000 euro home, 20% is 72,000 euros. But then comes the additional cost: land transfer tax, notary fees, land registry, and agent commissions. By the time you stand up from that bank chair, your total upfront cost is often 80 to 90,000 euros. Meanwhile, renting the same place might cost you 4,000 euros upfront, a deposit and the first month's rent. This is where the decision really changes. Buying isn't just a financial step, it's a financial identity shift. You go from saving monthly to committing monthly, almost overnight, because of the monthly costs. On one peaceful Sunday, you're a renter. You're relaxing on your sofa and watching Tartot, and suddenly the heating stops working. And you send a WhatsApp message to your landlord and go back to your tea. On another Sunday, you're a homeowner. The heating stops again, except now it's your job to fix it. And depending on the issue, it might cost you 150 euros or 15,000 euros. There's no landlord, there's only you and your savings account. This is what makes owning emotional. You gain control, but you also gain responsibility. And costs don't stop at the mortgage. In 2025, the average mortgage interest rate for new loans reached 3.71%, and experts predict rates to stay between 3 and 4% in the midterm. And then property tax, insurance, maintenance between 1 to 1.5% of property value each year, and the house guard. On paper, renting is predictable. Owning is an adventure. So let's do some calculations with a 30-year story. Let's imagine two versions of you. Same job, same income, same starting point. You as the owner. You buy a 300,000 euros apartment, you put down 60,000 euros. You pay about 90,000 euros upfront in total. Your mortgage at current rates is around 1,100 and 1,200 euros per month. With taxes, insurance, maintenance and house guard, your real monthly costs become 1,400 to 1,600 euros. Over 30 years, you pay around 550 to 580,000 euros. But you end up owning a home, something tangible and something which is very valuable. Now you as the renter, you rent for 1,000 euros per month. Your rent slowly goes up, historically 3 to 4% per year in major cities. So over 30 years, you may pay around 430,000 euros to 520,000 euros. You don't own the apartment, but you also never had to spend 90,000 euros upfront, and you never had that surprise 10,000 euros repairs. And if you invested the difference consistently, you might end up even wealthier than a homeowner, but that depends on the market situation. So both paths can make you financially secure. Both paths can also cause stress if you don't manage your money well. And that's why personality matters as much as price. Let me tell you about two people I know. Sophia, who's been renting in Bonn for years and values flexibility. She changes apartments every few years, tries new neighborhoods, and invests her savings monthly. For her, renting is freedom. Tobias, on the other hand, hates the idea of moving. He wants a garden, he wants to renovate. He wants to know that no landlord will suddenly decide to sell the property. For him, buying is stability. This decision isn't about the market first. It's about you first. Your tolerance for risk and your love for flexibility. Your long-term plans, careers, relationships, and your sense of home. Numbers help you make a rational decision, but your personality decides whether you'll be happy in that decision. So which one should you choose? Rent in Germany or buy a property in Germany? Buying fits people who love stability, consistency, and control. Renting fits people who value freedom, opportunity, and mobility. The real question isn't which is better. It's what kind of life do you want in the next 10 years, and which options support that life. So if you're leaning towards buying after hearing all of this, I have a video that breaks down exactly how much house you can afford in Germany based on your income, your mortgage rate, and your monthly comfort level. And if renting feels right and you want your money to grow while you keep that flexibility, check out this video on how to invest your first 100 euros in Germany.